afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's 786th YouTube video, baby. These videos are geared to help teach you the art of technical analysis and then how to apply it towards the markets that are trading right now. These videos, unless I specifically mention to you that they are for the long-term view, these videos are always for trading tomorrow. I do a video tonight, Tuesday night for trading Wednesday. That would be October 19, 2011. So this being filmed on Tuesday for trading Wednesday. Now that I've said that, this video actually has trading for tomorrow in it and a little bit of long-term. So we're going to use this video for trading on Wednesday, and there is a green Omni right off the bat, baby. Woohoo! And we're also going to refer to this video as time moves out. Traders, as you know, futures trading and any type of trading is extremely risky, can cause substantial financial loss. Futures trading is not suitable for every trading account, and if you do not recognize that a stop is your best friend, and if you do not place stops on every trade, you probably shouldn't even be in the trading arena. Make sure you have enough money to play this game because it's not easy and it's risky. But there's a lot of cowboys out there, we call them omniacs these days, that do like to play this game, that understand the risks, and this video is all about tomorrow's green Omni. Traders, the daily and weekly charts on U.S. indices are pointing towards a strong fourth quarter finish. That's for a little bit longer term. For tomorrow, the apex is working, and for many of you that follow me at my site, you know exactly what I'm talking about. Over the last few weeks, we had the indices going into what looked like a bear flag as they traded lower, jagged edge lower, and then they worked their way up like this. Most people assumed it was a bear flag, but the Omni came out with something different and said, you know what? I think this is not a bear flag. I think it's morphing into something different, something that we like to call an apex, and that looks more like this, where the market trades inside the apex and then breaks out at a certain point. That's what we thought those bear flags were turning into, and sometime around October 3rd, this year, of course, this month, I presented a chart to you traders, and I said, look, maybe it's this. Omni's got a beat on it. Let's keep our eyes on it. And over the next few days, we started to use that to mostly trade on the long side of the market. So far, so good, traders. It has been an apex, and we seem to have broken out of the apex and have come back down in the S&P and the Dow Jones Transportation Average, touched the top of the apex and took off again. That is what we'd like to see. That means the market broke out of what's called an apex, got above it, came back down and tested the top and is starting to move higher. Beautiful, traders. That's what us analysts want to see. So I think that the apex is working, and we have the green Omni for trading on Wednesday, and I would love to show you some charts. So with no further ado, let me show you what I'm talking about here. Okay, Omniacs, here is what I'm talking about. This is the S&P December daily bar chart, the ESZ11. On October 3rd, I presented this chart during a class to my Omniacs at the site, and I said, look, instead of this being a flag, which most people had this pegged for a flag right here, I said maybe this is not a flag breaking down. Maybe this is a possible false breakout of an apex. Maybe the bear flag is going to morph into the apex. So that was on the 3rd of this month, and we literally started to use this to expect it to move higher, and we started to look for long trades. We didn't trade every day long, but we traded a lot of our days long from this day forward. So here is the 3rd of the month. Here is an update until today's close, Tuesday's close. That would be October 18th. A possible false breakout of an apex turned out to be absolutely correct. We went up, 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 broke out right at the 75% mark, and then came back to test it, held and rallied all the way up to here. A successful test of the top of the apex. That was the S&P on the daily. That looks pretty good, traders. It turns out to be an apex. We had the false breakout, the rally out at about 75%. Comes back down, tests it, holds, and has a big outside upward day. Wow. You gotta like what's going on there. Let's look further. Now the leader, the Dow Jones Transportation Average, did the very same thing. Had the false breakout, rallies up, comes out, back down to test it, holds, takes off, and settles up here. Very nice on the dailies for both the S&P and the Transportation Average. By the way, the NASDAQ looks the same, the Russell looks the same, the whole package looks like this. Even better on the NASDAQ, it's so far above this already you can't even include it. It's all the way up here, and that's been leading the race. Now we're going to look slightly longer term. Those daily charts for trading were for trading on Wednesday, tomorrow. This is a weekly bar chart now. The Dow Jones Transportation Average on a weekly bar chart with the 200 bar moving average overlaid. Traders, I've showed this to you before, but look at the respect that this market pays to the 200 bar moving average. Holds, has a major rally. When it breaks it clean in one weekly bar and then has a disastrous drop. When it gets above, it holds after a few tests and has a major rally. We've come back down. We seem to have held that apex I showed you on the daily is the same one that's here now on the weekly. And we're up here, traders. We held the 200 bar moving average. So far, a successful hold. The world watches the 200 bar moving average. Fund managers watch the 200 bar moving average. You should be watching the 200 bar moving average, especially on the weekly charts. Let's look at another weekly chart. The E-mini S&P, another market that really pays respect to the 200 bar moving average, more so than almost any other indice. Look at here. 1 week underneath, nice rally. 1 week underneath, 2 weeks that time, nice rally. When it gets through, it comes back to test it, fails, and major break. Gets back all the way up to it, fails, breaks down, gets back to it again, jiggles a little, gets above. First time we've come down to test it, and we have held. Here we are, right here, right now. So if the way it holds underneath is going to work above, we should be off to the races. Now that is what the weekly, slightly longer term charts look like. We are day traders, so we may have to get long and short inside this move, but longer term view, this looks like it wants to move higher. Now, here is a chart I've shown you many times in many videos, but I want to just reiterate that this does happen just about every summer, and come September, a major rally ensues for the rest of the year. It doesn't go straight up, but by the end of the year, you are much higher than you were during the summer pullback. In 2007, you had June, July, and August, almost into September, pullback, major rally. During the 2008 crash smashdown, we even had the same sort of look. It got almost the exact same look, and then of course we had our major crash. So we're not going to count 2008 because the forces in that market were just too great to hold it up. We all know what happened with that big crash. Now we come to 2009. This is the Dow Jones Industrial Average Weekly Bar Chart. We drop off from June through August. After August, major rally from September forward. Then we go to 2010. After a major rally, we have a pullback from May through August. In September, right here, we start a rally. This year, we had our major pullback exactly the same. July, August, in September, a major rally started. Now watch this as I blow this chart up for you because this gets interesting. Here's that same chart. I've zoomed in on it a little bit. This is the first week in September last year, right after the pullback, first week in September, and look what followed. This is the first week in September this year. And look, already we're starting to go. It looks very much like that. Move slightly exaggerated because right about here was a Moody's downgrading of the United States credit rating. So we had a little bit more of a down move than you would have gotten this year or that year. But none the same 2 months, 3 months, right back up. But right here, that September, it begins. I don't think that's coincidence. I think that's repetitive pattern. And I say now that we are above this 200 bar. Once we got above it, test held, test held, test held. Now we here. I say we move higher. This points to a stronger fourth quarter finish for this year. Traders, pull your own charts, do your own homework. take a look at your weekly charts with your 200 bar moving averages. Then, of course, look at the daily charts to figure out how to get in and out while you're trading these moves. So, traders, there's my technical argument for why we have the green Omni for trading on Wednesday. And why, even though we'll have some ups and downs, the green Omni is probably the overall thing that's going to happen for the rest of this quarter. And I am not saying every day it's going up. We know that's not possible. But I think overall, from where we are today, where we'll be in December, I think we'll be higher. Where we'll be, well, Omni thought 1650 in the beginning of this year. Anything's possible, right? Imagine if we could get there. I'd say without a lot of effort, you could see 1450 like that, because let's face it, we were just at 1070 and change, and we hit 1240 and change, and that happened in about 8 days. Times that out by a couple of more times it does that, and if you do the math, that's not all that far away. So don't think it's insane. I'm not saying it's going there, because every year I make the call, and the Omni says that's where it'll end up. And I go, I got to make this call. That's what Omni says. But we're short-term traders. We don't get in for the year and see what happens. So I will be as happy and surprised as the rest of this crowd if we can get there. Just think how many great trades we can make in between now and then. Let's see what's going to happen with that. Again, the 200 bar moving average is showing us that we're going to have some sort of a strong finish if, in fact, we maintain levels above that average. The fact that we're day traders, if we start to break down, we'll start to sell the market, and the end of the year will go down. I don't think that's what's coming. What I just showed you, I absolutely wholeheartedly believe in, and I think we go up for this quarter. A statistic that you can look up for yourselves is that if you go back to the beginning of statistics that they've held on the stock market and you compare quarters, first quarter, second quarter, third quarter, fourth quarter, the fourth quarter is the most bullish quarter, hands down, throughout the history of the stock market. Being that we've just had a big pullback in the summer, maybe we'll get another one this quarter. That's the long-term view. Short-term view is we're going to at least start off buying tomorrow, and then we'll see where it goes. Now, did anyone notice anything? Clean shaved. How about that, traders? It only took me 1 day, right back on top. Omni gets short for the morning drop yesterday, picks up a big score, then gets long for the afternoon rally, and ends up catching both sides of the market. Go Omni, right back on its bicycle. Keep those dukes up, baby. You know how this Omni is. You give it a punch, it punches you back twice. Omni got us out of trouble today. Hopefully tomorrow it'll be nice and strong. Remember, there's no guarantee. Stop is your best friend. You can always lose trading, but Omni's pretty good, so it should point us in the right general direction on a daily basis. Traders, I'll see you at my site, livewithoscar.com. Don't trade alone. Jump into my free trading rooms and allow me to help you become a better analyst, which should in turn make some of you better traders. Hey, make sure you come check me out. I'm getting out of here. Think the alert's going off right now?
Yes.
Oh, I thought I just heard something. Was that an alert?
Could have been.
Well then, time for me to go. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. 786. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.